Hey, welcome active traders to our Trading the Open live room experience for over 15 years. This is Ken Calhoun coming at you live from Colorado, president of the original Day Trading University and TradeMastery.com. As always, all information is for educational use only. We're not making advice about what to buy, sell, or hold. By watching this screen, not to make actual trades. Make no profitability performance claims. It's all for a safe learning environment with paper trading or demo account only, because it takes a lot of years to learn this. I wanted to start off, I know this is kind of text heavy, but this is the only PowerPoint I'm going to show today, I promise, but this is one that I've showed for years that I developed to help traders do. Back in the corporate world, we call it a skills inventory, or what are the things that you need to get good at to become a better trader. And this is the list that I found, at least in my own trading experience, kind of where it breaks down into this list of 8 different skills. You may want to give some thought to which one you're weakest at. Kind of like my colleague Brian Tracy would say, you may be only as good as the weakest link in the chain. So maybe you're good at a handful of these, but you're not quite so good at some of the others, or you're newer to developing the skills in these. And that's fine, but just realize you need to get reasonably good at all this stuff to make it as a trader. And these are the kind of skills that I continue to teach you here. And I've trained the world's traders in for nearly 2 decades. I'm not going to read them. I'll let you read through those yourself, but you may want to at least pick out 1 or 2 that you want to work on. You don't necessarily have to rate yourself on a 1 to 10 scale, but that wouldn't hurt either, right? Give yourself a score, and there's no answer key or anything like that. The answer key is your profit and loss, right? That's all that matters, is how much money you're making or not. So that's your answer key. Is I'll give you your answer key. It's how much money you're making, breaking even with, or stopping out with. And the better you get at these, the better potential you've got to do well as a trader. One of the key areas that I found in training so many thousands of traders since 1999 is exits. And that's why I spend a lot of time here in the live room on the exit side of the equation, as well as the front-end entries identified for you before the bell even rings. That's the easier part. The tougher part is getting the exits correct, or scaling in, meaning adding to winning trades, which is why I often have 2 triggers for you. So you can scale in if you're an experienced trader. But the main thing is focus on, first of all, getting your stops right so that your exits are as close to break even as possible. And then once you're in a trade, you're managing the exit carefully to lock in either a modest profit or a scratch trade if it doesn't keep running. And develop a very specific approach to scanning, where you're doing what I do for you every session that we run here at Trading the Open, is isolating the strongest charts. Actually, the other PowerPoint, there's the companion piece, is this one. Speaking of exits, these are reasons that'll get me out of a trade. And again, I'm not going to read through all these. I want to jump into today's charts, but I showed these 2 slides on occasion to my members so that you folks can see what kind of professionalism or what kind of accuracy or focus you need to have if you're going to be serious about doing this correctly. So there should be a long laundry list of reasons that'll get you out of a trade, and a very short list of things that'll get you into a trade, right? Strong high velocity momentum breakouts or gap continuations on high volume will get me in, but all of these will get me out at the first sign of trouble. So it's very tentative. You're very careful and cautious about the reasons why you put on a trade, and very eager to get out of a trade at the very first sign of a trouble. That's what that makes for a good day trader. You're looking for any reason to jump out of a trade, kind of like a gopher that puts its head up. It's a great movie, Caddyshack, which I like a whole lot with Chevy Chase and others. So the point is, it's like a gopher sticking his head out of the hole, and then you duck back down at the first sign of trouble, right? Or a soldier out on patrol, and you're ready to find cover, duck behind the nearest Humvee or ground cover, whatever you can, if you start to hear any gunfire. What's going to get you into safety? And so this is kind of your safety net, the reasons to go back to cash, right? Always look for anything will get me to go back to cash. And that's kind of a perspective as well as all the specifics. So to be continued, but those are the kind of things that you may want to start focusing on learning and practicing here with me as you build your own successful trading strategy, and you start turning the corner slowly and start grinding away at it month after month and year after year. You're looking for reasons to get in, but even more importantly, reasons to exit the trade. So whenever I'm calling out live exits, like use a break-even stop or trail a stop here at the nearest 10 cents to lock in a 30-cent win. Frequently, the reason for the exit will be one or more of these things, right? It's always going to be one or more of these factors to get us out of a trade. So that is a good, quick coaching few minutes to look at. Now let's jump into our charts for today. We'll start off with the broad market. It's looking fugly, right? It's looking bad. We were in it on the way up, and then we avoided the afternoon carnage, which is good because the stock market sold off yesterday like a son of a gun. Made a big bearish cup, ended off at a day's low, and gaps down today for good measure, right? Our QMI is also down, so we've got a strong short bias. Despite the little bounce here, I wouldn't be too optimistic. It may run into overhead resistance right here, and a chop drop, and then continue on down. Or maybe it'll run up here. Either way, we're ready for it. That's what makes it exciting. We don't know the answer key ahead of time. We use predictive modeling to figure out where entries and exits should be, but focus on where the strongest price action directional move is. So the QMI NASDAQ voice of tech is down, right? We got a 94 to 87, so we got a 7-point drop in the QMI, which is strong selling pressure, and we got a gap down at a 2-day low in the S&P, which is also strong selling pressure. So we've got a strong short market bias. Obviously, with that, we've got a big, strong up move in UVXY. So that'll be one that I'm keen to look at for today if it's able to break free of its congestion zone. However, notice that following big moves, markets often go sideways. So we need to also be on the lookout for charts that are able to establish new directional trends or new breakouts or pivots in today's markets. So let us begin, as always, by going step by step through the watch list. I always go just sequentially from the top chart down to the bottom chart. So we'll start off with cores and end up with TIVA. And I sort these by alphabetical so I can find them easy to click on them for you. Anyway, cores, we like it because it ran 42 to 46, a 4-point run. It's huge. It's almost 10% intraday run in cores. We'll see if it's able to preferably reestablish its uptrend. I got an inside range trigger point at 45.30 for a breakout to the upside, or 43.8 on the short if it loses the whole number support. Next up, a real firecracker of a stock is LITE, L-I-T-E, the ticker. We're going to have to push this down a bit. We use 62.50 as the short if it triggers that. I'd prefer to go long on a bounce, and in fact, I'm going to tighten in a bounce trigger on this guy. Let's do 65.30. The reason for that is it's above the nearest whole number. Again, for experienced traders only. A new trader should not be touching something with a 10-point trading range like this with a 10-foot pole. Only, if you got 10 years or more experience, you may want to consider this. But it's got a nice big range. It's got a relatively wide spread pre-market, too, from 10 to 30. Looks like a 20-cent spread, so that's not good. But the point range is outstanding. So we'll see if LITE preferably gets a little bounce and a lift up here, or if it collapses and does a full mean reversion down to the 61, 62 region and chops around here. Either way, we are ready for it. Next up to bat, we've got NFX, a nice big bearish cup and an head and shoulders breakdown pattern. The left shoulder, head, right shoulder, and it's down to previous day's support. Exactly, right? So no mystery there. We'll see which way it breaks today. NFX, I got 26.8, which would be my preferred play on the long if it breaks above this resistance area. 26.8 the long. I may tighten that down to here. I want to see what it does on the open first. And the short trigger's down at just a simple 2-day low breakdown at 26.20. Not my favorite price because it's a little close to the previous day's support. Visually, I'd prefer 26.10, but I don't ever go short at 10-cent marks because it likely bounces off the whole number. So we'll continue with 26.20 for the short trigger. Next up to bat, we've got VRX. And Valiant Pharma dropped all the way from whole number 17. Remember I said that was kind of the great wall for this thing, right? 17 whole number resistance all the way down to just over 15 support. Nearly a 2-point range on this teen price stock. 15.80 makes sense for a bounce long, or 14.90 for a sell-off continuation short if it drops to new lows. Next up, my favorite stock chart, or I should say ETN, ETF. It's actually an ETN, exchange traded note. VIX ETN UVXY did an explosive breakout yesterday afternoon because of the stock market sell-off, and it gapped up today. prefer to see a new play on a breakout up here somewhere, right? So UVXY 32.8, the long trigger, that would be the best play of the day in this chart. Second chance or second choice would be a short drop under this support line, which is 31.50. We'll hit it short at 31.20 if it collapses and drops back down here. Either way, we are ready for it with the box trading range set outside the limits of a highly volatile instrument. That's how you day trade. What else we got going on? HR, gap or down from 32.8 to 31, whole number. There's that whole number effect again, right? Anyway, HR, we got a long trigger here at 31.4 for you, a short trigger 30.7. This is a professional's approach. I feel completely 110% comfortable doing a squawk like this to a Wall Street professional prop firm or market makers firm or specialists or whoever's out there in the bullpen, you know, or on TV, right? That'd be great if they had this on TV, right? It'd be great to be on cable news TV with this kind of alerts, and people say, wow, how did he do that? Anyway, the point is, professional approach really focuses on a focused basket of instruments with high velocity gaps, wide range breakouts, and paying constant surveillance or put under constant surveillance the strongest charts so you can follow up with them in real time. That's a professional approach to day trading. In marked contrast to the thing that college kids do, which is, I don't know. Look at that, it gapped up. What they'll do is they'll pull up a chart like this. Hey, it gapped up. It may get some green buyers. Let's go long 5,000 shares at 445 and scalp it for 3 cents. That's a stupid losing way to day trade. The correct professional way to day trade is to focus on things with some momentum and some juice. GDX, a nice gap up. Again, gold goes up when stocks go down, usually. And GDX is no exception to that rule. Gapping up to new highs here right under 2270. Next up to bat, we'll see if it takes out new highs. Got a 2280 long trigger because I have a false breakout filter. I think that would be the amateur's price where beginning traders might get in. Hey, it's taking out a new high. Goes up to 2275 and then collapses all the way down there, and people scratch their head wondering why they got stopped out. Well, professionals, we're a little more cautious about our entries and much more aggressive about our exits. Remember that. Be slow to enter, fast to exit. It took me about 8 years to figure that out in live real money trading. I used to be fast to enter and slow to exit. That doesn't work out as well. Much better to be cautious on your entries using false breakout avoidance filters, meaning a range above the current high before you get in. So you avoid the false breakout at resistance or the handle of a cup or whatnot. And then get out at the very, very first sign of trouble, right? So that's very important. Exit stage left, as one of the old cartoons used to say, exit stage left. I forgot what cartoon that was. But anyway, exit stage left constantly whenever you can. Anyway, 22.8 is going to be our trigger point for GDX. And last but not least, we've got our inside charts with SYF. Nice big up and down chart. We'll see if that gets a lift, preferably up in here. The long trigger is 31.10 for now. I'll very likely tighten that to 30.8 if it drops down here. We'll see. I don't have any data yet to work with, but once we see where it trades today, be in better position to lock and load. Next up, Bristol Myers, another big up and down chart. We'll see if it continues to cycle upwards or if the sellers hammer away at it. And last but not least, Teva Pharmaceuticals. Looks like it's distressed. Probably a short down here would be the best play. I got a 1790 short. I'll likely tighten that up to 18.25. We'll see where things head depending on the pre-move volume. And then last but not least, Weight Watchers. Let's do 4660 as a swing trading trigger. I'll see if it's good for day trade as well. I'm keen to trade this because the open range breakout length of run. In fact, let's go ahead and put in a trigger point on that guy. Let's play it aggressive. 45.8 on the long, 44.8 on the short, whichever hits first. And that, my friends, is our pre-market prep. Just in the nick of time, we've got just around 15 seconds. Thanks, Rich. You're right. Snagglepuss, Heavens to Murgatroyd, Exit Stage Up. Yeah, you're right. That was it. I forgot. It's only been a few decades. That's right. I forgot the Murgatroyd. You're right. I'm trying to tell my daughter about the Looney Tunes card. Anyway, here we go. Ding, 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 ding. Let's see where things go. You are correct. What a memory. I'm impressed. The older you get, the more you forget this stuff. But at least there's Google. Okay, let's see what else we got. Where are things headed? The first thing you do, step number 1 in professional trading, is you sort your quote box by percent compute, and if your numbers don't match up, it's because you're not computing change from the open. The default setting for most charting software is previous close. That's worthless. That's garbage. What we want is relative strength so that they're all zeroed out on the open, and then we start to see what's running quickly, and that's what you need from open. So UVXY is starting to get a little pep in its step. 32.8 the first long. Again, you know the routine. We'll do a quarter point over the whole number for the second at 33.20 if it keeps going. Always plan ahead. All right, always plan ahead. Let's be a step ahead. SYF, let's tighten that guy down to 30.7. The initial trigger is fine too, but we'll just tighten that down to 30.7 on the long. 30.3 on the short, whichever hits first. So we are in a constant state of adjustment of our alerts. GDX, 2280 the long, Weight Watchers, 45.8. Spider's starting to drop, so the UVXY might trigger soon. Keep an eye on it, as well as our short triggers. In VO, the short trigger is 43.30, and that's right here. Got a bearish cup, may bounce here. If it gets down here, I'd be tempted to put a 43A long trigger, but for now it's likely to chop around. High risk, pros only, 44.20 on the first long, 44.60 on your secondary. It's more likely to drop down to 43, so that's the projected move with the 43.30 short trigger if it loses that right under that bullish lower shadow. Who else is starting to run? Chords is trying to get a little pep in its step. We'll see if it gets a little lift. Let's do, 45.30 is correct. I'll stick with that. 45.30 the first long. And if it keeps running up, 46.20 your secondary. NFX parked right here. What do we got? We got a 26A long trigger. We'll stick with that. It's not there yet, but headed that way. So NFX 26.8 on the long. TIVA's headed downwards as anticipated. Got a 17.90 short trigger. I'll live dangerously. Let's do 18 and a quarter, 18 or 18.20, I should say. 18.2. Experienced traders only. That's risky because that's at support, and it's usually not a good idea to short right at support. It's better to put a safety valve here. And technically, I'd use 18.10, except for the fact that I don't go short at 10. So I'll put a high risk rating on that 18.20 short. Secondary, likely a, I don't know if safer is a good word, but 17.90 would be a secondary. Use a break-even cover stop at 18.20 in TIVA in case it bounces. Light is now dropping, 62.50. We're getting close. We go short if it loses 62.50. Experienced traders only. Where's my long? 65.30. I'll keep it there. So we're good to go with the light triggers. And last but not least, we got Valiant Pharmaceuticals taking a face plant, taking a dump. Good short call from 14.90. If you got a piece of it, cover half now. Put a cover stop and scratch on the balance. A break even on the balance. Next short would be, 14.5 if it keeps heading downwards. Move this over here so we can see what's going on. Okay, now we'll see what else is in play. So that's our first rack of calls, or that's the first setup of everything. Now it's just a matter of maintenance or follow through, and also finding new plays, right? Who's hot, who's not. Hertz is trying to drive off the parking lot without us. I don't think so. 15.20 the long call. The better you get as a trader, the more nimble you are, and the more eager you are to identify what's running and how to capitalize on it, how to profit from it. It's a lot more, like about, kind of like a good analogy that I've used for years is going to one of those old school carnivals, and you've got a lot of tickets, and you're out there trying to do all the games of skill, And you don't really care how any one goes. You want to see if you got a few prizes at the end of the day, right? And it makes it worth your while. So you may be out there doing 40 or 50 plays, and hopefully you got 5 or 6 that made you some money. And the rest are scratch or small wins or tiny stops at most. Avis, actually I like that one better. Cars are both driving up. The auto rental, 30.6. That's likely a decent trigger long if it bounces. Maybe good to 31. And a 29.7 on the short. So whichever hits first. So we go long if it gets over 30.6. I'd be okay at 30.82. And a short at 29.7. It looks like longs have it, so we'll see if car runs. I like to put current hot charts in this quad of thumbnail charts to make it easy to follow up. Weight Watchers is trying to break to new highs. The long call in Weight Watchers is 45.8. So that's in the money by a bit. You may want to sell half now, put a stop at scratch on the balance. Next long, I would do 46.50, which is just a little bit above the high of day. So if it keeps getting new high buyers, 45.8's now in the money. Ka-ching, sell. Again, once something runs 20 cents or better for us, sell half now into the buyers and trail a stop at break even on the rest. You lock in a small profit. We lock and load, we're out. HR is starting to bounce as well. 31.40, the long trigger. Looks like it just took that out. We'll see if it continues on up or not. 31.60 would be a second long trigger. This is the most intense part of the market, is figuring out what's worth trading and where, and setting even tighter entries where needed. In my straight momentum gap fill would be 36 on the long. A more likely intelligent play would be to short it at 30.20. Even though it seems like it's kind of contrarian, I always think like a market maker. I was looking at how to exploit the weakness or strength of the players, the traders, as well as the charts who are out there trading it. So the newbie traders are buying new highs. Experienced traders are fading the highs. So I was looking at ways to exploit the pockets of strength in the market, and where that's a very different approach than retail traders who mostly lose because they're always just chasing, right? Or late to the party. Professionals were out early and people wondering what hit them. How did that happen? Well, it's kind of like playing pool against a pool shark. There's a little hustle to it. You got to learn how to take advantage of the plays out there that the newbies, like these kids that don't know how to day trade, or trying to pretend like they're expert traders and they've been trading 8 years or something. You got to learn from professionals. Anyway, Teva continues on down. 18.20 a Rockstar short. So far, it's in the money. Go ahead, cover half now. Put a cover stop at break even on the balance. You know the routine. Once you're in the money, even just a quick scalp, 10, 15, 20 cents, it's good to take a little profit off the table just so you get in the habit of something that may be a new experience. Get in the habit of taking itty-bitty tiny wins so that builds confidence and builds timing and pattern recognition skills. The main thing is it builds your timing of exit, skill set, or core strategy much more effectively. So I said to go short at 18.20. Go ahead and cover some right now. I know it's not a big Rockstar 80 cent or dollar win like we've had before, but it's still a bit in the pocket, which beats nothing. And then if it comes back to scratch, we go to cash. Next short, we can always reshort if it gets down to 17.90. Right, and now we're back at scratch. That was a good call. And those are the type of things you want to start learning. What else? Starbucks getting decaffeinated. It's not too late to trade it. It's okay. It'll all work out. Just remember, do a whole lot of paper trading here, because that's what you want to learn. As many as one top trader would call occurrences, an option. When the world's top options experts I know would call occurrences. You want to try and get as many of those in your experience set as possible, so that you're ready to focus on these things and get as many entries and exits practiced as you can, which is another big benefit to being here. Is I try not to cover like 30 or 40 instruments. I try and keep it under a dozen or 15, but they're going to be the strongest ones in the whole stock market. And the more experience you get with those, the better off you can be as a trader, because you're professionally looking at entries and exits in the right way, in the right time frame. You start building your core skill set. Weight Watchers at 45.80 still in the money. Booyah. Next long is 46.50 if it climbs up over that. Maybe good for this much today, right? So we'll see if it does a repeat. So what you do as a day trader, your eye should always be drawn on a 2-day chart to the previous day's open range breakout, ORB. A concept developed by, I think it was a commodities or option or commodities trader by the name of Tony Crable back in the day. But anyway, ORB's open range breakouts, it ran about yay tall yesterday. We're going to see if it runs about that far today. Or is this it? You know, are we going to stick a fork in it because we're at resistance? Anyway, sell some now, put a stop at break even on the balance. I got you guys in right there. It's in the money. But since we're at previous day's high, we expect it may turn back downwards. Always be very deeply pessimistic about directional moves, and seek to lock in profits as things continue in your favor before it's obvious to the crowd that they should be selling. Must like MIL, I got up there twice. Car baby, what do we got? CAR. Told you guys to go long at 30.6 and 30.8. How much money would you have made had you taken those calls? Welcome to Trading Open, home of the rockstar breakouts. Boom! I'm one of the industry's top experts in breakout day trading. And you can see why. Do the math. Good, no BS, honest calls done before the move. A lot of these morons running trading room, oh yeah, I'm in already and now I'm looking to take a huge multi-$1,000 profit. And they do these phony, what do you call it, Photoshop, fake account, screen cap crap. That's not what to learn from. You want to learn how to actually do this the right way, the way I teach. Anyway, 30.6 was my first long, 30.8 the second long. Any questions? New traders sell it all now. Now, why would I say that? Why on earth would I say that? I said to buy 30.6. You're now 60 cents, 70 cents, 75 cents in the money. Paching. Why is now an intelligent time to sell this day trading chart? New traders should sell it all now. Take your money. Send me a bottle of Don. Well, I don't drink anymore, so I don't know. Send me warm and fuzzy thoughts. Anyway, nailed it, but now's a good time to sell. And I don't see any sign of sellers. It's still running up, Ken. Why on earth would we sell? Well, it's because professional traders, like all those that I taught over the years, see this data point set and see that that's previous resistance. Therefore, that's a good time to sell. Got it? Experienced traders sell at least half now, trail a hard stop at 31.30. Keeps going up, we'll make it 40. Yeah, let's do 40. Trail a hard stop at 31.40 on this guy. So if we get back under the 40-cent mark, sell it all. Sell it all, Mortimer. If we get under 40, if I start to see 39s, 38s, we take our money and run. Because we're 80 cents in the money from the first call and 65 cents in the money from the second call. We want to keep that. We don't want to screw around and give back profit. Yeah, now it's back down where we got it. No, be the guy that takes, or the lady that takes the money and runs. Not the trader that screws around and waits too long for your exit. So let's trail a hard stop at 31.40. Again, from a tape reading perspective, we're looking at large blocks on the bid. You know, if you see large blocks at a price point that's under the current inside, that's a bearish sign. Or if we see large numbers on the right in the sizes column, like 2 times 100 or 5 times 40 or 10 by 60, repeated over and over again, that would be a trouble sign. Likely Hertz is in the money too. I have a ticker in here. Let's pull that in. Same story. Hertz, I got you guys in a 15.25. That went up a whole point for you. I said, go long right here. Personally, I'd be selling it all now because of pullback. Sell all open, long Hertz. 15.20 was my long call for you guys. What a play. 1.1. A 1-point winner on a $15 stock. Who else in the whole trading industry makes calls like this? That would be nobody. That's why you're here in the right place, right? Exclusively at tradingtheopen.com. for over 15 years, the choice of intelligent professional traders. Let's take the money and run. We don't want to screw around and give it back. Same thing with CAR. Let's sell it all now because it's starting to pull back. Sell all open longs now. Take the money and run in both Avis and Hertz. Ka-ching. I got you guys in CAR at 30.6 and 30.8. It ran up a whole point. That's a 1-point win on a $30 stock. Who else can make those kind of calls in the whole industry for day trading stocks? Nobody. Period. I stake my reputation on that. I'm the best. Anyway, yeah, it's not a $3 stock. You want to trade things like this that actually run a point, right? So anyway, CAR and Hertz, plays of the day for us here. Hertz, I got you guys long at 15.20, ran to 16.20. Any questions? If you traded 1,000 shares, you'd be up $1,000. In just this one, right? If you did that with the other one, you'd be up even more. Good rock star breakouts. And again, good professional exit calls. When in doubt, get out. You're up a point, take a dang point, right? You should not be. The wrong-headed thinking would be, well, what if it runs to 18? My thinking is, well, what if it runs back down to 15, right? So you escape exit stage left with the money, and that's a really good set of calls for you guys, right? Hertz and CAR. Good traders know how to pick the best and the brightest charts as they're in play. Speaking of which, UVXY, I said to go long 32.8. If you're in it, it's up 15 cents. Sell half now 10 cents. Put a stop at break even on the balance. Next long if it breaks 33.20. Now let's see, but I'd be done for today. I'd be hooting and hollering downstairs. Guess how much I made, and I'd be finished. I'd go to cash. I'd close out any remaining positions. We got big 1-point winners. In the CAR stock, went from 30.6 is where I got you guys in. Ran all the way up to 32.6. Now it's up 2 points. If you guys let it ride, congratulations. I would have gotten out earlier where I said back here. But it ran up even another point. So it's a 2-pointer. Now definitely now actually let's be a little clever. Let's have a little fun with Mr. Goldfinger. Pros only 32.20 on the short, which is very risky and dangerous. And don't even think about it unless you got at least say 8 or 10 years full-time professional experience. But 32.20 on the short with an exit target of the mean reversion at 31.50. But sell definitely, absolutely, positively if you're long this guy. Sell all open long rental car stocks right this second. They continue to run on up, which is great, good for them. But we want to sell into the buyers before the price action comes back down to earth. That's a really good breakout, right? That was a perfect breakout. I got you guys into 30.6, right above that. And if you're wondering why, it was right above that peak there. So I got you in long at 30.6. Also want to say thanks to the traders like Ricard for referring friends or colleagues if you're part of a trading group. You were here, right? You saw this live. Good, honest, no BS. Called ahead of time back when I was here. I say go long if it gets over 30.6. And it ran up for us a full point. I got us out early. I got us out with a 1-point win. We didn't get the whole 2 points out of it, but a 1-point win, like an apple a day, is great for health, right? For trading. Anyway, good calls. We'd be all done here. Let's see, Hertz, let's put in. I would not be further trading it to the long side. That whole saying pigs get slaughtered. I'd be taking profit. I would be looking for rollover shorts though. So 1680 if it loses the 17 whole number. 1680 would be the first short. But I got you guys in directionally long correctly here at 1520. Do the math. Astonishingly good calls. That's what you want to focus on as you learn with me here at Trading the Open. Those are the right kind of charts to call, right? Specifically, not small caps. HMY, oh look, I got in 20,000 shares there and I got out with 3 cents per. No, that would be really stupid to trade. Just say no to penny stocks and cheap stocks. They're epically failing, stupid charts. AUY, wow, it ran all of 6 cents. Uncertainly, and with lots of pullbacks, and you'd like to get stopped out. Just say no. Hey, this thing ran all of 7 cents. Wow, maybe if I traded 300,000 shares, I would have made 2 cents. Only morons trade things like that. Professionals, we trade things that go a little something like chwang, double chwang, things like that, right? Makes a lot more sense to trade these kind of charts than anything else out there in the market. I hope I've made the point, as I have the last near 20 years. What a rock star in Hertz. I got us out early. It ran up 2 points just like Avis, but still, I'd rather take my 1 point with some degree of certainty at the first sign of trouble rather than I know they say let your winners run, but I found in day trading the opposite is true. Let your winners go a bit, and if you got a point out of it, then go ahead and take it. If it keeps running up without you, don't worry about it. Don't sweat the missed top and bottom. If you get the 1 point out of the middle like we did, that's good. That's very good professional call. A 1 point win on a $15 stock is epic. It is. That's like world class. You're not going to get anywhere better in the world. You have my word on that. You will not get any better calls than like 1520 buy, sell 1620. That was a good live call for you guys. Kept running on up, but I would have missed out on that. I would have taken my 1 point happily to the bank and been done. That's $1,000 on 1,000 shares, or $500 on 500 shares. That all adds up. What else we got going on? UVXY starting to pull back. Let's see who else is starting to run. NVO is trying to poke its head up to new highs. 44.20. If you got that first long, that's in the money 24 cents for you. Sell half now. Put a stop at break even on the rest. You know the routine. Once something runs 20 cents for you, I said to go long at 44.20. Once it runs 20 cents, you sell half to lock in a profit, trail a stop at scratch on the remainder. You can always rebuy if it keeps going on up over 44.6. But in the interim, if it misbehaves and drops, kind of like right now, you still made money on it, right? It's still a good 20, 30 cents in the, 27 cents, 28 cents in the money for us here. Good calls. Thanks. HR trying, GDX trying, Bristol trying. BMY got a 57.10 long call. It's not quite there yet, but it's trying to get some buyers. So 57.1 is my long trigger point for BMY. In the meantime, the stock market's doing nothing, right? The spiders are 0.01% change on the day. 0.0%. Stock market didn't do anything. Yet here trading the open, we nailed breakouts in Hertz and Avis, right? What else do we got going on? Starbucks is trying to get a little caffeinated here. The 53.7 bounce trigger is good for a bit here. Just a dime so far in the money. Go ahead and sell a bit now to the buyers. 15, 14, 13 cents. Sell a bit now. It's so important you learn this strategy. It's so good, right? I said to go long 53.7, but the trick isn't how much money can we make out of it. It's how do we lock in a little tiny gain on half of it, like right now, to scalp out a bit and trail a stop at break even on the remainder. So if it does misbehave, it doesn't cost us anything. That's so important that you get that break even exit strategy right. So yeah, sure, it's an in the money call, it's in the money, but a good trader plays it tight. If we get back down to 537, we go to cash. No harm, no foul. If it keeps going up, great. And you combine that with big rock star winners like these two, right? That's the approach you want, is when things go sideways or down, it doesn't cost you anything. When things do go, if it runs 80 cents or a dollar like these two did for us, that's outstanding. And that's how you make the math and the numbers of trading work out. You can't just trade single instruments at a time. And that's why, because let's say you'd only traded, Starbucks on the bounce because you're sure it was going to be a big bounce. But then you missed out on these two big winners because you were just focused on the one chart. That's why you can't day trade and just focus on a single instrument or just one or two or three. You should have at least 8 or 10 that you're following. If you're a new trader, at least do 3 to 5, something that's reasonable so you're playing a field. Well, I'd be close to done. I would have been done a few minutes ago after those two big car stocks. LIT, nice big drop for us finally. The short trigger at 62.50 is now worth almost 2 points. If anyone got a piece of the action, I don't know how many of you got that, but that's a 2-point winner exclusively at Trading the Open. Oh, yeah. Stop madness. There's got to be a better way. He's just so damn good. Did I have any stops today? I don't think so. Ching, 2 points. I'd cover it all out because it's 2 points. You got 2 points on a day trade, you take the 2 points. I don't care if it goes down to 50 without us. I would take my 2 points and be proud of it, right? And the reason is because we're getting close to previous day's low, or I should say, I'm sorry, previous day's high. which is current day's low. We're getting close to a place at which it may bounce. So now I'd be covering the short and looking for an upside pivot long, right? That's how you play it like a pro. So light, cover out all open short right now. We shorted 62.50. We're covering 60.6. Almost a 2-point win for you. Epic. Thanks, James. You could see why they call me legendary. Yes. A legend in his own way. But a legend in real time. Unparalleled. I should be after doing this nearly 20 freaking years. 61.7 the first long. If anyone's been doing anything nearly 20 years, they should be good at it, right? It's like something Tony Robbins said too. He said, at this point in his career, after doing this for so many years in front of so many people, you should be good at it, right? So pivot longs would be the next one. I'd be covering all open shorts strategically. We got in the right way. We went short here. We're covering here now because of the fact that we're near previous day's high. So I need a 2-day chart. You can't make it day trading with just a single day chart. Like these moron 30-something kids are out there trying to tell people, oh, let's look at a 1-day chart. That doesn't tell you this data point, right? You wouldn't see this unless you saw the answer key the previous day right here, right? That's how I drew this line. So although 1 day gives you kind of a close-up, I prefer using a very close-up like this for the 1 day. So we're looking at the last 15, 20 minutes only or so of price action. That gives us a much better in-close, zoomed-in look. Now's a really intelligent time to cover the short. We also have a couple of bullish lower shadows. We've got a hammer, little tiny hammer here. Oh, it's not a cute little hammer. It's a little tiny hammer. Baby hammer here, but that is a hammer pattern, right? It is. Yeah, it has at least twice the whole real body height of the lower shadow. So that's a hammer. The cover would actually technically be right here, right above, actually, right if it gets over 60.7. But I'd go ahead and cover it now because we're 2 points in the, just around 2 points in the money on the short. So the next play I would be looking at would be the recovery bounce up here. I always get in the habit of doing what I call drawing crab legs on the, I say that because I'm really partial to crab legs with butter. I like them at the big casinos like Bellagio at the hotel restaurants because they saw the crab legs ahead of time, so you don't have to use those as much. Those crab, I don't know what they're called. Those crab crackers is what I call them. Those metal things that you use to crack crab legs. That's a real chore. It makes you work for it. I like the top end Vegas casinos because they saw the little cuts in the crab legs. So all you have to do is with your hands break it open. Anyway, crab legs. This looks kind of like Alaskan or snow cream crab legs. Mark out your long and your short anticipated price paths and see how well you get it. You know, maybe your first 2 or 3 or 4 years you don't get it and you're wrong most of the time. That's okay. Be persistent. I am. The better you get as a trader, the better you can project out price action moves. I used to have a course called Price Action Mastery, which is really popular. No longer offer that. I should offer it as a downloadable course at some point. But anyway, mapping out price action, directional long and short plays will start getting your eyes developed for professional trading. You're looking at a pro trader's approach. You're looking at trading price action, the most likely path. You know, if you were to set odds, where would the even money odds be that you'd lay on the bet because it's most likely to follow it, right? So where's the even money play? You know, maybe zigzag sideways would also be in the group. But anyway, it's long and a short path or a sideways chop. Either way, we covered the short at near the exact freaking bottom, which is pretty intelligent. The next plays are the longs if it gets over 61.7, which it hasn't yet, but may do that soon where it's just around 61 whole number. Let's see, Tony's asking about MYOK. Let's see. Never heard of it, but let's take a look. Yeah, it's good. I like it. I like that. That's a good one. Yeah. I'll add that to the. I like that so much. I'll even add that to the perma list here. So thanks. I like it because it's got over 15,000. That's the first thing I look at is the volume and the volatility. So volume's over 15,000 shares a minute. Check. That's important to translate into tight spreads. Looks like a nickel spread on this one, a little pricey. And I like the fact that it's done an uptrend. What I don't like is a relatively compressed open range breakout. So So for that reason, it's not great for a day trade, but it's good for a swing trade, sure. Let's do 37.7. Again, not a personal trading recommendation, but for educational use only where I'd get into it, I'd do 37.7 for a swing long. I wouldn't day trade this guy because the open range breakout length is only about yay tall. Actually, the point range is fine. So, it's a good chart though. Yeah, I like this one. It's good. It's healthy. It's got the volatility in the volume. So good call. We'll add that one to the list. There's so many good charts to work with. And again, don't be put off if you're a newer trader that's, kind of fumbling and clumsy and confused and, well, yeah, I saw you do it, but, you're the expert. How do I do it myself? Well, the way you do it yourself, it's like the answer to that old joke about how do I get to Carnegie Hall or Carnegie Hall? Practice, right? You got to just practice this stuff. Practice in a safe learning environment and get in as many calls as you can. Hertz and Kara are two biggest winners today for you. Got plenty of other good charts to work with, like this NVO breakout in progress. The long call was 44.20. It's up 30 cents in the money. Next long call is 44.60 if it climbs up over that. That's how you day trade like a boss. So just to summarize my two biggest picks of today that worked out so well, we got you guys long Hertz HTZ at 15.20. The reason for that was a small bullish cut pattern on a breakout continuation with tall green candles. And so we got in long here. I got us out early in 16.20 because 1 point on a $15 stock is an epic win. They continue to run up a point without us, but that's okay. We locked and loaded. We got in here and out there. That's a good professional day trading window of opportunity. The other big winner today was Avis, the ticker CAR. 30.6 was the first long. And again, the reason for that call was it was right above the previous day's high. And second long call was 30.8 right here. And I had us get out right during this pullback. There was a pullback here right near 31.6 because of this previous resistance area. So we got out, actually I think it was right here, so right under resistance. Learning how to do even if you miss out the last tail run, don't let that make you become a sloppy trader. This was a good near 1 point win, and that's a good professional's approach, because for every time it runs up like this, maybe another big handful of times where that would have been the top and it dropped back down. So getting in and out with a good 80-cent win on this one was a good call, just like the 1-pointer in Hertz. Exclusively yours at tradingtheopen.com. I'm Ken Calhoun. Thanks for learning with me.